Hello and welcome to the Financial Advisor Forum's 2015-16 presented by UTI Mutual Fund and CNBC TV18. Today we're at the first and the only Ritz-Carlton hotel in the country in the IT hub of India, Bangalore. And we have a power-packed forum with experts from the financial advisory community who will be addressing the opportunities and challenges faced by independent financial advisors, especially in current turbulent markets.
The Indian financial advisor community works tirelessly to help create and manage wealth for the Indian investor, giving them sound investment advice and product recommendations. The Financial Advisor Forums travel to cities across India to reach out to independent financial advisors and discuss with them how they can tap into the growing market, increasing their scope of business, and also how they can break into the mindset of an investor and help them move from safe assets and start investing in equities. For the 7th edition of the Financial Advisor Forum 2015-16, we take our second forum to the city of Bangalore.
Welcome to the second Financial Advisor Forum 2015-16, where we reach out to some of the best independent financial advisors in the city and talk to them about the opportunities and challenges faced by IFAs and also the future of the financial advisory community. Now joining me on the panel are
T. Shrikant Bhagwat, MD and Principal Advisor, Hexagon Capital Advisors; Lovai Navlakhi, Founder, MD and CEO, International Money Matters; Leo Puri, MD of UTI Asset Management Company; and Mrinjali Agarwal, co-founder Vomantra.
One thing that I want to kickstart the panel with is this need for a mindset change. And I'm not talking about a mindset change of IFAs. Let's start with a talk about mindset change of customers. We love this word guarantee. So we are happy that, okay, our fixed deposit is in the bank. It's earning us a guaranteed return. We'll get it. But that needs to be changed. We need to get more exposure to the equity markets, the capital markets. So, Lovai, if you could first comment on this, if we can start off with you.
If I talk to my clients, typically these type of clients are ones who want to avoid taking risks.
Yeah.
And then I try and tell them that if you are earning 9% on your fixed deposit, but you are in a 30% tax bracket, it's 6.5%. And for you, if in any of the years inflation is higher than that, then you're actually losing out. Which means there is 100% probability of your losing money in that investment. Whereas if you put some money in equity, maybe there's 1% chance, 10%, whatever it is, it's a chance. We all know it's more, but to tell them that it's a 10% chance that you might make more money than after tax and after inflation, which is less risk. And I think that is probably the perception that people need to be sort of taking care of. And if you do take care of that, then I suppose they will start thinking about alternative investment.
And Mr. Puri, this other idea of a mindset change for the IFAs is also required, which is what we are doing. I mean, this is the 7th year of the Financial Advisor Awards.
No, absolutely. I mean, an IFA at the end of the day is a highly respectable profession and a vocation where they are providing a service which is as critical to an individual's life as that of a lawyer or a chartered accountant or a general practitioner and so on. So I think that self-esteem needs to be very, very visible to the client, and the behavior needs to be that of a professional, a true professional, not that of a broker or somebody who's merely a transitory person in the individual's life. They are there on the same side of the table as the client, in the same way as any trusted advisor would be. And I think that is what builds self-esteem for the IFA, and that's what builds respect eventually in the eyes of the client.
Shrikant, I want to come to you on a point, which is when you were talking about what Lovai is also talking about, the idea that, move on from fixed deposits. So let's talk mutual fund. Let's get more exposure to the equity markets. But sometimes, when this calendar year didn't start off all that well for the equity markets, and there might be a sense of, schadenfreude between the people who are invested in fixed deposits, and they tell them, see, I told you, you shouldn't have invested in the equities, the markets have tanked, etc., etc. When that happens, how does an IFA guide the client, their customer, to say that, I agree the markets are down, but just wait it out. You're not in this for a 1-month game. You're in this for the long term.
There's an old saying, Sumit. Every bear has his day and every bull also has his day. Right? So one has to clearly look beyond these, a bull of a day or a bear for a day. I find people understand pictures very well.
graphics. And if you can show them with simple line charts of how often and how frequently this has occurred, that markets have fallen. Okay, 92, 93, 2000, 2006, and so on and so forth. You have so many times that markets have fallen. And in spite of the fall, the end point, which is today, is much higher than the beginning point. That's all one has to explain to them and tell them that this is to be expected. But if you stick on, you are bound to make more money than a fixed deposit after paying your taxes. Once they have understood that downs can happen, they're prepared for it.
Mrin, you know, with Womantra, you're out there spreading a lot of financial awareness, education. And we were talking earlier, and you said that, yes, there is this lack, there is this gap, that people are educated, but not necessarily financially educated. What's your advice to them so that they can financially educate their clients and customers?
So first and foremost, what typically happens is that when an advisor goes to meet a client, you'll typically meet the male, the man of the family, right? I think the first and foremost thing is to get the family involved, which I do think a lot of IFAs do try to do, right? There is a fair bit of resistance even from clients to get in the spouse into these discussions, right? In a lot of cases, the spouses are not interested themselves, right? So I think the first and foremost thing, is to basically try and change that mindset that women do not understand money, right? And you have to change the mindset both of the male and the man and his wife, right? That's one of the things that needs to be done. I think the other thing as well is to constantly educate clients, because what happens is that I do see a lot of time people talk in some jargon, right?
Yeah.
And people really don't understand. Sometimes clients don't want to show that they don't understand what the advisor is saying. So I think first and foremost, the advisor also needs to talk in very simple language, right? And constantly also send educational material to clients so that they, constantly remain educated. And as Srikanth said, at times like this, when the markets are down, they just have to keep reiterating that just hang in there.
Well, it's a power-packed panel discussion that we have underway, but it's time for a short break. Don't go anywhere. We'll be right back.
I think the first thing to remember is you're a professional and you are in an honorable profession. So you should have pride. You should remember that you are a trusted advisor, just as a doctor or a lawyer is, or a chartered accountant. So hold your head high, operate with both the self-esteem and confidence needed to serve your clients as a true professional.
Welcome back to the Financial Advisor Forums 2015-16. We're coming to you from the beautiful city of Bangalore. I have with me on the panel 4 experts from the financial advisory community. So, Lovai, is there a cause for also a large level of customization? Every client will not be the same, so you need to educate them and also customize, help them in their investment. So again, I'm also talking about maybe moving from just transactionally that, okay, I'll go invest your money, to an advisory that I will tell you where you need to invest, how you need to diversify, and taking that a step further is the customization bit. So not selling, not the same solution for Lovai, not the same solution for Srikanth, both the solutions would be different. Should that also become a big focus, an important point?
Yeah, so if we sort of examine the relationship between the IFA and the client, imagine that it's a stranger. It's the first time you're meeting him, maybe he's got a reference from somewhere and he's meeting you. Now you have to build rapport with that person. That rapport should lead to trust so that he starts listening to you. So when things are down and Srikanth is showing an infographic, he should be ready to listen to you at that point in time. As Min said, very, very important that we don't try and just pick up the jargon we hear and say, let me throw it out and confuse the hell out of the client and say, okay, I have not understood anything, you tell me what to sign, I'll do it. So I think there has to be a constant effort to try and speak in a language which the client understands. Now once I establish that sort of rapport and the client understands that I'm doing things in his interest, that's when he starts listening to you. So obviously knowledge needs to be there, and the fact that each client obviously has to feel important. So if you tell him, here is my standard portfolio and I'm going to apply it to you because you are 42 years of age, then I don't think you're going to get him, because he'll say, okay, I'm a commodity and you're treating me like one. What is it that you're treating me, how are you treating me specially? Which is why I should then feel really good So I have to invest, I have to listen to you, I have to trust you, and I have to feel good about it, even if the markets are down. And I think that's the challenge.
Mr. Puri, when we see some of the stats and we see that, the B15 market is growing, I've got some numbers that says in March, up till March 31st, 2015, the B15 was 1,89,000 crore and up to 2,14,000 crore by the end of December 2015. So we're seeing a growth in that area. That market is not saturated, it's far from it. So to get there, to get the larger growth that we are expecting from there, how can that be pushed?
Well, actually, this problem of empanelment of new IFAs is a big challenge facing the industry. And in reality, you don't send IFAs to those areas. You need to grow IFAs from those areas, because these are community-based services is typically the way they will start. So if I want to have IFAs who are going to be successful in a, let's say, a small town or district where there's not so much awareness, the best way to do it is actually to have people from within the community start to get drawn into the profession and to take this up, which is pretty much the way that the industry grew, and UTI in its history essentially grew its agency, if you like, entirely on that model. You went into places and the local people from within that community entered this profession because they thought it was a worthwhile thing to do. And we have to make sure we don't lose that, because that is the only effective way to do this. Now, on the one hand, the regulator has tried to help this through the B15 incentive, which has certainly been very helpful and very valuable, and I would strongly counsel against its premature withdrawal, of which there is occasional talk. So I think it's too early to withdraw the B15 incentive at this point. But on the other hand, because of other difficulties, new IFAs are not coming on board. There are alternative employment opportunities, of course, which is a good thing, but we also have not done enough to work towards drawing them into the industry and making it economical for them to survive. And this needs to be a priority for all of us, for us as manufacturers, something we will take up with the regulator, that in the next 2 or 3 years, we must restart the process of empaneling new IFAs, because without that, we are not going to succeed in getting the penetration, and that needs to be done bottom up at a community oriented level.
And that also will help build that trust factor, which is so very important for if it's an IFA from your community as opposed to an IFA that's coming from outside. Shrikant, I want to talk to you about Bangalore. Now, Bangalore itself has changed so drastically in the last decade, 2 decades. And it's become more of a mixed cosmopolitan city, so more and more people coming from outside to live here. How has your experience been here with the customers, with the clients? What are some kind of changes that you're seeing within this city?
Bangalore has always been considered a knowledge city. If you look back at history, you had all the public sector units in Bangalore. You had the Indian Institute of Science in Bangalore. And this gave rise to a society which was learned and well educated. They are the ones who subsequently became entrepreneurs when the opportunities opened up in the late 90s and early 2000s. They have created wealth through their startups and through their businesses. And that is the development that you're seeing in Bangalore. And each of them are in turn recruiting so many. I think the big IT companies together must be recruiting about 3 lakh people a year, and the bulk of them in Bangalore. And all of them are having good disposable income. That is the opportunity for advisors.
Mrin, I want to talk to you about this trend that happens is where the customer is also very educated. They have their own knowledge. But what happens is when we talk and we say mutual funds, immediately everyone will say, okay, mutual funds means directly liquidated only to the equated only to the markets. But mutual funds also have another angle, which is the debt mutual funds, which is the liquid mutual funds, and that is also gives you better returns than just an FD. What's your thought on that when you're dealing with clients, when you're dealing with people, when you're imparting knowledge to them also about this aspect that yes, definitely, if you want to get into mutual funds, take those baby steps, go with debt mutual funds. You don't need to directly jump into equity if you are risk averse as such. What's the thought on that?
So from most of the people whom we've trained, I can tell you that less than 10% people even know what a debt fund is. And these are educated people in IT companies. You started off the discussion with saying that people need to get out of this mindset of guaranteed returns. The question that we get asked is, okay, how much is this going to give me versus an FD, right? So I think, the biggest challenge at this point in time is to really change people's mindset, to move them from this, guaranteed to, market-linked return investments, right? And I think, of course, we do talk a lot about liquid and ultra-short funds as just a starting step. Certainly, there is a place for this in everyone's portfolio. It's really under-penetrated at this point in time. I think most of the investments that come in debt probably come from higher net worth individuals, certainly not much from the retail category.
On that note, it's time for a short break here on the Financial Advisor Forum's 2015-16. We'll be right back.
First and foremost, you must believe that you're providing a value-added service. And second, you should really look at managing the client's money the way you would manage your own money, right? So take the same risks, do the same stuff that you think that you would do with your money.
Welcome back to the Financial Advisor Forum's 2015-16. We're coming to you from Bangalore. I want to now, stir the discussion to talk about technologies. Mr. Puri, on that note, UTI is also taking big steps in that. So you've got this UTI Buddy app. How did that happen? And just if you want to take us a bit through that, how's the response been?
Technology is, of course, we know, just an enabler.
Yes.
It's not necessarily changing the relationship between an advisor and his client, but it offers you an opportunity to strengthen it if you use it well. So the idea behind the Buddy app, and the reason we first introduced what we call a B2B to C app as opposed to just a simple direct to consumer app as a first proposition, was because we wanted to find a way to enable those who are already serving clients and to make it easier for them. And to familiarize them, and in a way to reduce the perceived threat, because the widespread view then, and to a large extent even today, is that technology is much more of a threat than an opportunity to the advisor community. And we actually genuinely don't think that's true. If you get into a mindset where you go on the back foot and you start feeling fear and defensiveness, if you like, you will lose that battle very quickly. So this fear that technology is going to disintermediate you, you probably already, if that is how you're going to approach it, you've already lost the battle. So think about it as, how is it going to empower me? It's fundamentally allowing me to do three different things. It's allowing me to communicate much better with my client, more transparently, more quickly, and so on. It's allowing me to share information more easily with my client and to stay in touch, if you like. And it's allowing me to transact more efficiently and effectively. Now, all of these are ultimately highly enabling events. They are not threatening events. And to clients also, that's how they look at it. They don't look at technology and say, oh, now it's an opportunity to get rid of my advisor. So I think go on the front foot with technology. That would be my absolutely core advice. You must always be on the front foot. Embrace it, grasp it. It is an enabler. It's a way of strengthening what you're doing. There is absolutely nothing to fear. So if you are still surviving today, you have, by definition, transitioned beyond that. You must be doing something else if you are still surviving as an IFA today than simply stamping a form, that myth that used to exist. So take that on the front foot, go forward, embrace it, and I think you'll find you'll triple your business in no time, because it's an enabler for you.
Okay, Mrin, one last question to you. You're dealing a lot with high net worth clients, and they are different from retail clients. So what would your advice be to other IFAs out here who are dealing with high net worth clients?
So first and foremost, I believe a lot in myself, right? And, a lot of times what happens, for some reason, the advisors are not seen as important as, let's say, doctors or anybody, the role of a lawyer in your life, right? So first and foremost is that you need to really believe in yourself. And the other thing that I really follow is that, I only advise things where I would put my money myself. So those are the two things that I really follow. And, beyond that, of course, you can always have discussions with clients, you can always have disagreements. But I think, if you really put up a front where you believe in what you're advising, I think that really takes care of half the battle.
Well, that's all the time that we have this week on the Financial Advisor Forums 2015-16, brought to you by UTI Mutual Fund and CNBC TV 18. But we'll be coming to you next week from the City of Joy, Kolkata. Until then, from the entire team, many thanks for watching.
The world is a changing place, okay? And the competitive marketplace is going to be radically different from what you're seeing today. And the only factor that will differentiate you from the rest as compared to, say, a robo-advisory is knowledge. So I would urge all of you to actually skill up, improve your knowledge levels, and go there and be the differentiator.
IFAs play a very, very important role in enabling clients to get wealth. And I think sometimes they forget that they are playing a really, really big, important role. They need to have a very positive attitude, they have to have a long-term attitude, and they have to genuinely believe that they are doing something good and helping people build wealth and retain their wealth over a long period of time. And that's really going to help people meet all their financial goals. So I think that the most important thing probably for the IFA is to have confidence, have self-belief, and just rock it.